ladies and gentlemen. Welcome to the live stream. We will be on camera live in just a moment. What you see in the lobby right now, in the backdrop right there, that is some footage from Las Vegas at the NFT LV conference. It was a great time. That's one of the panels that I was speaking at recently. And just as a reminder, proof of real life influence. I go to these events, I speak live at these events. I'm a panelist, oftentimes moderator, and attempt to contribute wherever I can in the crypto ecosystem, not just take. So thank you for your support here on YouTube. It means the world to me, and you are the reason that I make this media. Stay tuned, and of course, please click that the thumbs up. Subscribe if you're not already subscribed, and do share the link while we're live. It helps YouTube know that this is relevant content that could be helpful to somebody somewhere, and so your clicks count. They matter. They really matter a lot more than you realize, especially with some of the issues that the platform is dealing with right now by way of automated, we'll say, moderation, automated issues that other creatives that are outside of the crypto ecosystem have been complaining about over the last week. If you've been watching Markiplier, if you've been watching Jacksepticeye, or others who are in the gaming sector of YouTube, you know that there are some serious growing pains on this platform. So your support of this channel means the world. Thanks so much. Thank you for hitting those likes and sharing the link while we're live. I see Crypto Mikkel in the chat saying, LFG mining fam. Appreciate that. Appreciate the sentiment. Let's keep it going, guys. Appreciate you sharing the link. Let me jump in and let's get started. Welcome back to Mind Your Biz. My name is Seth, and yes, I'm wearing the illustrious I Mine NFTs hat with the little Mind Your Biz logo down at the bottom. This is only true for another several days, right? It could only be true until potentially September 20th. So the 20th of this month is when possibly the outside window of the Beacon Chain merge is supposed to happen. So I'm going to wear this as many days as I can, just because it's funny. The irony of being able to use mining rigs to assist other people with their NFTs. It's only going to be a joke for a little bit longer, right? And it also does kind of help reinforce the fact that mining is the security for all of the other markets that run on top of DeFi. If you're not already familiar with the show, today we're going to go over the sentiment analysis. We're going to go over the major market cap coins and their price movement. We're going to go over Bitcoin and a chart that we've been tracking over the better part of a year. We're going to go over the top news articles from today. We're not going to make it as quite as long a stream as we did 2 days ago. Today we're going to kind of scale it back, be within 1 hour. We're also going to go over the cost to mine one full Bitcoin, the cost to mine various different GPU mineable coins and FPGA mineable coins. We're going to go over a portfolio that we've been tracking for the better part of a year that helps you figure out the best possible choices that you can make with the equipment that you have available, whether it's CPUs, GPUs, FPGAs, or hard drives. Nobody does what we do here at Mind Your Biz, and we were the first to create a morning live stream GPU show. So innovation resulting in imitation. I take that as just somebody trying to flatter me by imitating what we innovated over a year ago. So thank you for being here. Thank you for hitting that thumbs up again. That's part of the YouTube game, part of the algorithm. I got to just remind you to do that stuff. And a reminder that nothing that you see on this show, on this live stream, is intended as legal, financial, business, or investing advice. You have to make your own decisions, and you have to face up to them. I'm not your CPA. I'm not your CFA. I'm not your advisor. I'm not your consultant. You haven't paid me for any of my advice, and well, frankly, to put a fine point on it, you can't legally prove that I gave you advice. I'm just a guy talking on YouTube who's trying to give a 360-degree view of the markets and share what I find as I go. Now, do I have a background that maybe helps me understand some of this stuff fast? Yeah, it helps me understand some of this stuff fast. Does it help me become an expert? No, not an expert. I am a consultant in the space, but it's primarily for marketing and blockchain integration. That is a very, very interesting designation as a consultant. It does not make me an investment professional. So if you do need help with that, seek help, right? Go seek guidance and then pay for it, right? You'll have legal recourse after the fact if you pay a professional to give you advice there. Chat is coming in. Paul D says, I was out watering my yellow and raspberries, the official cultivar of the apocalypse. That is telling. If Paul D is already starting to lose hope, which is very unlike Paul D. Kevin Hawthorne is chiming in from Lakeland, Florida. Says, good morning from Lakeland, Florida. Good morning, Kevin Hawthorne. Thanks for spending time with us here at Mind Your Biz. Thank you again in advance for sharing the link while we're live. It means a lot. Looking forward to seeing the live stream grow. It does take a while for YouTube to occasionally propagate the signal, even when people are subscribed and they have notifications turned on. So if that describes you, if you have notifications turned on, thank you for attempting to even just tune in for a few minutes when you first see the notification turned on and give it a thumbs up. It helps YouTube to know that this is content that other people should see. But without further ado, let's jump into the Fear and Greed Index. Score of 20, down from yesterday's score of 23, down from last week's score of 25, down from last month's score of 31. We're finally starting to slip into what I think is proper despair. I think this is the point at which we need to see markets actually become fearful so we can start making our plans to do things, to make our moves, possibly to set our limit orders, to decide what level at which we want to purchase some of the cryptos that we have strong conviction about, possibly right-size our portfolios or just rearrange our portfolios and try to figure out what we really want our portfolios to look like when they grow up in the bull market, right after this bear market has gone through and done what it's going to do. But the trend kind of shows that we're finally starting to dip down, and by way of sentiment, right? Just by way of sentiment. And this is an analysis of Twitter, Reddit, and the major high cap cryptocurrencies like Bitcoin and Ethereum and some others. Hey, I see the view count going up incrementally. Really appreciate you being here. Thank you so much for hitting that thumbs up and then sharing the link while we're live. But let's take a look at what this means by way of market cap and price movement across all the major cryptocurrencies in the crypto ecosystem. We're going to use cryptobubbles.net. It is maybe not linked to in the description of the video. I will change that so that it's updated. But cryptobubbles.net is a phenomenal visualizer to show us kind of what's happening in the markets. And it shows that Luna Classic has been on a tear the last couple of days, last week or so. It's just done phenomenally well compared to everything else. The others are kind of, they're kind of more obscure compared to Luna Classic. We were all familiar with it. It was just the main Luna ticker symbol before, the Terra ticker symbol from before, and has been relegated to the Luna Classic status since the Luna Foundation has launched something else, and or Terra Labs has launched something else, right, to be the main chain moving forward. Now, all of that is essentially a complete and total unmitigated failure, but Luna Classic still has a lot of speculators in it, and apparently has added almost $1 billion to its market cap over the last week. This is crazy because we know on this show we talk about projects that have extremely strong fundamentals, and those projects may not ever see a $1 billion market cap before they are forced to fold, or during the first 10 years of their development. It might take them an extremely long time to get that level of participation. And I'm thinking about projects such as Flux and such as Ravencoin, right? They haven't had a $1 billion market cap historically, and it would take quite a bit for them to get that $1 billion market cap. They would have to do a minimum of 300% to 400% performance over their current pricing. So to see that happen here with a failed project, have it just add $1 billion worth of value in 1 week, that's just crypto for you, I guess. Just how things move here. But let's change the time frame just a little bit. Take a look at our last month instead. Take a look at the movement at that point. We can see that Nexo is doing well, that Cosmos is not doing the worst, right? Over the last month, it's doing all right. EOSIO is also experiencing a bit of a surge, a resurgence in popularity. I think primarily because it hasn't broken in the same time frame that Luna or Luna Classic did. Ton Token also doing all right. These are kind of outliers, clearly. Others that are experiencing an extremely sharp downtrend would be Helium. Now, again, I'm just going to kind of be very, very clear here. I'm not a big fan of Helium, and I haven't made that any kind of secret here on Mind Your Biz. It's not my favorite project. By way of fundamentals, I can't get behind the core mission of Helium and the Helium network. The fact that it's really designed to get people to lean into the Internet of Things, which I think is by and large a dangerous trend for security and privacy purposes, like internet security. I can't get past that first part. It's a non-starter for me. So when people say like, well, you don't understand that every refrigerator in the future and all of our appliances, they have to talk to each other. No, they don't. That's just false. They don't have to talk to each other. My refrigerator keeps my food cold just fine without ever talking to my phone or without ever phoning the police, right? Like, sure, occasionally the inside of the fridge is so dirty that it probably should be a crime. But the point is, it's not going to go and like talk to the astronauts or go inform local authorities that I need to throw out a bit of old cabbage. Like that. What possible need does my fridge have to communicate with any other entity or human or robotic, right? Like, there's no point in having that added to a refrigerator or a washer dryer for that matter. Why in the world does my washer and dryer need to talk to my refrigerator? And why do they need to talk to my tablet? And why does that need to talk to my AC unit, right? To my central heating unit. Now, there's one thing about like smart appliances, I think that they could do better, but here's the thing. We've got really good localized general purpose AI or specific AI that can run in these devices with single board computers, with teeny tiny computers that cost a fraction of the functionality of these total appliance costs. We could add smart capabilities, so-called, to a washer dryer or to a refrigerator or to any other appliance we use on a regular basis, including a thermostat, without having them internet connected. And we could do so for really a couple $dozen. That's all it costs at this point. And at this point, the AI libraries that run natively on these tiny little single board computers, they're open source. They do all kinds of things. They're programmable. And really smart companies, like companies that are run by really smart engineers like Samsung, right, Sony, and heck, even some of the domestic options like Whirlpool and Maytag, they can probably figure it out, right? Probably figure out a way to add a little bit of intelligence to these devices without making them phone home or report all of our usage to the data aggregators like Google, Facebook, Microsoft, and all the rest. I'm just not feeling it, and I'm going to maintain that stance. So for me, it's a little bit vindicating to see that Helium is now starting to receive some of the bad press that I've suspected it deserved all along. Sorry, not sorry. And I've been telling you for well over a year, when people ask me about Helium, I've just been very blunt about me not being a fan. And getting mining profits out of it does not change that fundamental disagreement that I have with its reason for existing. So that's going to be my stance moving forward. But yeah, recently it's come to light that Helium is not really providing value by connecting devices. It's providing value by showing proof of connection to other devices, meaning proof of connection to other miners. So miners proving value by being connected to other miners. That's not value. That's proof of connection. In the same way that a lot of the proof of capacity networks don't really provide value by allowing you to use the capacity on those hard drives. But we're on a little bit of a tangent here. Just to say, proving value or providing value is a lot more than showing you have a high-performance network. And we've known this in blockchain for quite some time, but it's finally coming to light with Helium, and I think that this trend is totally deserved. Let's take a look at the Bitcoin chart. This is typically one of the largest indicators. It's a bit of a real-time indicator in analysis, or in sentiment, rather. And it looks like we're still kind of performing according to this very large channel, right? This is a very, very generous channel. We've got plenty of room to bounce around inside this channel. Could be, we're not performing rocket science here, and this is not technical analysis by any stretch, right? Like we know this, right? You know this, that you didn't come to this channel to learn technical analysis and for me to define for you how many different indicators you should be using. What we have here on this particular chart is a couple of lines and then the simple MACD, the moving average convergence divergence indicator, which just kind of shows us whether or not we are in a bullish divergence or a bearish divergence. We happen to be in the middle of a bearish divergence right now, and the histogram kind of shows that we haven't quite been able to reconverge yet and then go and flip into bullishness. So with the two moving averages, we're just still kind of showing that we've remained a little bit bearish. And I maintain, just my gut is telling me we're going to continue along that channel until we see somewhere between $12,000 to $14,500 Bitcoin. I haven't gotten tired of saying it. I haven't gotten tired of proving that this is probably going to be what actually happens. And people who are saying it definitely has to be $9,000 Bitcoin or $11,000 Bitcoin, I just don't think that they're paying respect to how manipulated markets are right now. And yes, there are definitely larger institutions that want to buy your Bitcoin cheap. So definitely don't sell it. Don't sell the bottom and don't buy the top if you can avoid it. Everyone always says like, oh, you know what the best advice is? Buy the bottom, sell the top. Like that's really cool. Most of us can just barely get by trying to not do the opposite, right? Like that's usually the best we can do. It's just like, don't sell the absolute bottom, don't buy the absolute top. Try to do what you can to sell upswings and buy downswings, and you're probably in a better position than the majority of retail. But yeah, I do suspect that we're going to see a lower low than we have right now, and I don't think that it's going to go quite as low as people think because of the manipulation. So I'm not going to get tired of mentioning that. We do have the value channel that we added on the last live stream, this little blue line, just like you're going into the grocery store, Kroger or whatever, and you see great value, right? That's great value Bitcoin right there. If you want to pick it up at a deal, like look for the blue line. That's when you're going to get your most spanking deal on Bitcoin. Nothing has changed on that chart, but that's because we have extremely generous expectations about it possibly like tumbling down this channel. And we're not trying to track a 5-minute chart, a 15-minute chart, a 2-hour chart. We're not trying to kill ourselves by doing technical analysis here. I think there are far bigger problems that a lot of us have to contend with right now. And hey, it looks like that view count has definitely popped on up. Thank you for sharing that link live. Definitely appreciate that. Bit of a pleasant surprise. So thank you so much. I really appreciate that. Mind Your Biz fam. Appreciate you being supportive and sharing the link and making sure that it does get propagated out to the YouTube algorithm. This helps others on YouTube who are not part of the GPU mining fam, not part of the Mind Your Biz community, to be able to see what we're doing. By the numbers, just to throw it out there, I'll toss a chart onto the screen. By the numbers, about 70%, 70 to 80% of you are not subscribed. When you are tuning in during these live streams, I discover after the fact, about 70% of you are not subscribed. So smash that subscribe button, thumbs up, the bell icon, all the stuff that you got to do to make sure that you're notified when we do go live again. We're currently on a publishing cadence of every Tuesday and Thursday at 8:05 a.m. Pacific time. That gives you the opportunity to tune in just before work if you are on the West Coast, or on your first major coffee break, or just as you're getting ready for lunch if you're on the East Coast of the United States. So thank you so much for your support. Stay tuned. We will be publishing on this cadence all the way up to the Ethereum merge and beyond. Publishing every single day. We've got enough news. We probably could publish every single day, but as it is right now, Mind Your Biz, yours truly, I do have a full-time job still. I do consulting in blockchain integration and in Web3 marketing, so I don't always have that level of time, and I publish as I can. I try to publish as frequently as possible, so your support makes that possible, and I appreciate you being here. I appreciate you being a new member of the Mind Your Biz community. Thank you in advance. Let me jump out of the way and show not our Bitcoin chart, but some news. It is time to talk about what Sam Bankman-Fried thinks about all this, because, you know, that's what we always wake up in the morning asking. What does this guy think about Bitcoin? Right? That's what I wake up thinking about. I'm like, what does SBF think about markets? So here we go. We're going to talk about what he thinks about markets. And does he stand to gain anything by potentially manipulating us? No. What could he possibly gain by manipulating our emotions? Nothing. He's just a really nice guy. So let's see what he has to say about Bitcoin, Ethereum, and just markets in general. He says he's not nervous, just kind of like the sound bites. He's not nervous that Bitcoin slumped to 20K. He said that a lot of weak hands were flushed out from crypto. And then here's why this crisis, air quotes, is short term. I'm not even feeling the effects of inflation, says SBF Alameda. I mean, right? Of course he's not. Any reasonable person wouldn't be feeling the effects of inflation or half of the value of their cryptocurrency holdings just disappearing overnight. I mean, really? Come on, people, grow up. Be like SBF. So it says Bitcoin is showing resilience now. Let's go through this just a little bit. I think there is a quote that I've highlighted that I wanted to talk about. But he does say, like, the upshot of all of this is to say that he thinks the crypto market will start going back up when the stock market does. He thinks that Bitcoin is showing resilience right now and that mostly the recent slump had to do with Jerome Powell's statement on August 26th that the Fed intends to stick to its hawkish strategy and thus price pressures on the stock market will continue. Well, he's not wrong. He's definitely not wrong. And SBF is a really intelligent guy. And, jokes aside, he's a really intelligent guy, and he has been a relatively good actor in the space. He doesn't appear to be mixed up in too much controversy, and so I'm just being kind of silly when I talk about him that way. That said, he is a little bit out of touch. Let's be very real. You cannot become a billionaire and not get a little bit out of touch with retail. There's no possible way. I mean, show me an example of somebody who's definitely not out of touch and is also a billionaire. I don't think it's really possible. You can stay grounded, you can do things that keep you grounded, but it's still a bit of an ivory tower that you, of a necessity, have to move into. That mindset of adapting to a new lifestyle. And if you don't change when money comes into your life, then you will likely lose the wealth that you've gained. That seems to be the lesson that I take away from seeing people radically change their net worth. But I mean, I wouldn't know from experience. I'm still Seth from the block, as they say. Used to have a little. Now I have still a little. But no matter where I go, I know where I came from. So, yeah, SBF Alameda saying that it's probably going to go back up when the stock market does because of the Fed pressure, the hawkishness of the Fed. I think that's probably true. And again, I have been capping on SBF this whole time. A little bit. It's kind of fun, right? I mean, that's a time-honored tradition. We make fun of those who have success because it makes us feel better about not having success. Just call it what it is. Work harder. All right. So the block has an article about how the crypto miner, the Prime Block is the name of the company. Their CEO has left. Why would this happen? Well, his name is Gaurav Budrani. He was the former CEO of Prime Block, is leaving or has already left the crypto mining and infrastructure company. And that's because we can surmise it's because of the impending listing on NASDAQ as part of a $1.25 billion SPAC deal that was canceled just in August, right? Today being September 1st as of the time of recording. But that SPAC deal didn't go through, and, well, he either fell on his sword, so to speak, or he's just moving on to other things because that was a bit of a Hail Mary, so to speak, trying to get the company into a position that he felt was more manageable or giving them the resources to be able to continue operations in some of their most profitable locations, right? So co-location, mining at scale, it is big business. And this is just proof. They were going to raise $1.25 billion without too much difficulty, right? And then it just didn't go through. They had to scale back. Paul D brings some truth in the chat and says, we should all try just not being poor, like Do Kwon said. It's true. Do Kwon, SBF, these are our new prophets. So come and worship at the altar of their perceived wealth. We've all got it wrong, Paul D. We've all got it wrong. They've got it right. The Deadwood is in the chat, says, morning, beautiful people. Hey, I appreciate that sentiment, and I echo it fully. So back on the news here, Prime Block CEO Gaurav Budrani, well, he's no longer CEO. We have to start talking about him in the past tense. The former CEO has left the crypto mining infrastructure company. CoinDesk and his LinkedIn profile confirmed that he has left, but it was expected to be listed on NASDAQ, didn't go through, and now he's out. No real quote from him from that point, but back in April, he said, we believe the transaction will provide tremendous momentum for our next phase of growth. In addition, our partnerships with key suppliers are expected to enhance our ability to rapidly scale the business. What I think he is not saying, and this is where we things get interesting. What I think he's probably not openly admitting to is the very likely fact that they were in more financial distress than the public was aware of. Now, since they are not a public company, since they were not publicly listed or ever listed on NASDAQ, we'll never know for sure, right? We won't have that kind of insight into their finance, but it does seem like a lot of larger mining operations that operate at scale have been struggling with their finances, and a lot of that has to do with the cascading effects of the Three Arrows Capital failure. So many crypto mining operations that have been mining at scale. Compass Mining is another one of them that had executive resignations not long ago. or key executives, key people above the line executives resign from their company. I think a lot more of it has to do with, loans just not being available, cash not being available to run the typical operating expense, not to scale per se, but to run the typical operating expense. And they know better than anybody what the available runway is to complete their operations for a given month or quarter or year. So I suspect, not gonna start a rumor, not gonna say this is definitively true, don't have proof of this, but I suspect that what was happening with this particular outfit is that they just didn't have enough. Prime Block just didn't have enough to go the distance for the foreseeable future with a top-heavy structure, right? With a CEO that draws a big salary, or with some other key individuals at their company that draw a big salary. So either he's right-sizing their employment force to help them get that runway that they need, or he's just trying to abandon ship to be sure that he's not leading it when they finally run aground. Tell me what you think down in the comment section. But I mean, this kind of news just seems to move in cycles, right? We seem to see repeats, or we seem to see the rhyming history of corporate restructuring in this space, and mining at scale. In my opinion, that's not what Satoshi intended anyway. So this is probably good for the ecosystem at large. Hopefully, if it does result in Prime Block having a much larger falling out or possible liquidation of its assets, hopefully that is a decentralized look, right? Hopefully it doesn't just get sold in bulk, right, by the pallet load or by the warehouse full over to a competitor. Hopefully instead, those of us who are committed to mining at home or in a decentralized fashion, hopefully we get first crack at all of that equipment that is liquidated, if it does come to that. Now, I am projecting a lot now, kind of prematurely talking about the complete and total failure of this company. I don't know that that's definitely going to be the case, but if it is, I sincerely hope they do the right thing. I sincerely hope they do things the way that Satoshi talked about it and envisioned, and that we don't centralize too fast, but we do try to distribute those mining equipment, all that mining equipment, out to the at-home miner. The Deadwood says, thanks for raising the bar on push-ups yesterday. Seth is the Jack LaLanne of cryptocurrency. Hey, I appreciate you saying that. You noticed that the NFT LA, right, or NFT Expoverse footage, that this is kind of the thing I'm pretty much asked every time I go on stage to do some kind of push-ups. Hey, clapping behind the back, clapping and hands raised over the head, Spider-Man push-ups, alligator push-ups. We got them for days, my friend. We've got push-ups in this house for days. And with my kids, I mean, they grumble about it, but they get it done, right? So raise up the kids in the way they should go. So appreciate the feedback there. Let me jump out of the way here and talk about our next news. We got Babylon Finance shuttering the Babylon Finance protocol after it lost only 3.4 million in the Rari hack. You like how I say that? 3.4 million. It's not too much, right? Compared to other hacks that we've seen around here. That's not too bad. That would be devastating if that was your finance or my finance. Like, oh my gosh, I'm $3.4 million in the red. Like, I am never going to financially recover from this, right? Like Tiger King status. That would totally ruin us personally. For most people, right? For most people, that would be more than you could catch up to if you had just a negative balance of $3.4 million, more than you could catch up to for the foreseeable future. You'd be like, all right, well, I'd never really previously thought about dealing drugs, but it kind of seems like a good idea right now. It's like never be able to pay off that debt, or potentially run the risk of running afoul of authorities. Like, you'd have to make some hard decisions, is what I'm saying. Not necessarily, I went too quickly that was a sharp left turn. But you know what I mean, right? Like, you'd have to really figure out, how do I fix this? Be an intense train of thought there, right? And very, very heavy discussions with your significant other, right? But Babylon Finance lost $3.4 million. And for their company, right, for their outfit, for this protocol, it wound up being devastating enough that they have to shut it down. And that had to do with a hack on Rarible, right? So let's take a look at some of the other facts that we need to know about this story. Babylon Finance planning to close its decentralized asset management service in November due to lack of funds for operations. It's a real bummer too, guys. I hate seeing this because it's obvious that this is a much smaller outfit that can't absorb the cost of that kind of a failure. And unless they have a third-party benefactor, like, I hate to admit it, but a group like FTX, like Alameda Research or others, they can't really get back on their feet unless they have an infusion of cash. Somebody else rather picking up the debt, right? Picking up the torch from them or for them, and then continuing operations. But there you go. There you go. So back in April, Rarible had a hack, and that caused them to lose $3.4 million. And they say they've failed to reverse the negative momentum caused by losing 3.4 back in April. So it's a bummer that it's taken so long for them to finally figure out, okay, can we do this? The question mark was there. Maybe we can still continue operations despite having lost $3.4 million worth of assets. And unfortunately, the answer is no. They haven't been able to do it. The lending service that they launched on Rari Capital, not on Rarible. They say they haven't been able to revert the negative momentum. Market hasn't helped. Yeah, Ramon Requero. Hey, just to say it, I don't know Ramon, but my heart goes out to Ramon and the team, because generally speaking, this sort of thing affects several people on the investor side, and then of course on the builder and the project side as well. So I sincerely hope the best for everybody who's been working on this project. I hope they're able to learn from this on some level, take those key learnings to some other kind of project, and then contribute meaningfully somewhere else without having a hack in the future. So heart goes out to the people who've been affected and who've been damaged financially by this. It's a rough time. As you know, in cryptocurrency, we have to be willing to take as many L's as we do dubs, and we've got to be prepared to lose everything we put in to these investments. This is dangerous freedom, and it gives us tremendous exposure to upside, but that means tremendous exposure to risk. Let's take a look at the next news bit from Bitcoinist, talking about how CZ is currently being probed. Why, Bitcoinist? Why would you frame it this way? Why would you say they launched a probe against, right? I guess they didn't say probe into. It sounds kind of weird though, right? It's still weird verbiage, right? Why the U.S. launched probe against CEO of crypto exchange Binance, and who you mean is CZ, right? We're talking about CZ, Changpeng Zhao. He was under investigation by U.S. federal prosecutors. Launched in 2020 by the Justice Department, authorities in the country were seeking information about the company's anti-money laundering activity. The Deadwood jumps in and says, I do my 120 a day. Hey, for push-ups, that's great. Lane was a motivational speaker, fitness and nutritional guru. His style push-ups are very difficult. Yeah, no, I hear you. I'm familiar with who Jack LaLanne is or was, right? Rest in peace. Also swam the English Channel once a year for his entire adult life, including up into his 70s, even though his wife said she didn't like it. She wasn't a fan of him doing that. In fact, he swam the English Channel on several occasions while towing other things behind him, little dinghies and boats, and by a rope or by a chain, and would continue to swim across the English Channel once per year for his entire adult life. So TV personality, guy who got a lot of housewives fit in the 1950s and 60s. Yeah, no, we're down with the Jack LaLanne. I appreciate you. Appreciate you even drawing the comparison. Really, I am flattered by that. Dude was one of the realists in the fitness industry, because he was also a family man and a legit guy. So, yeah, he says you got a long life to come, my friend. I hope so. I hope I can keep it as real as Jack did. It was good stuff. In fact, some of the weights that I have out in my at-home workout shed, they are Jack LaLanne branded, because 1 kilo is 1 kilo, 1 pound is 1 pound, right? That's one of the nice things about physics. It doesn't give you a rug pull. If you have I've got a box full of weights, a milk crate full of weights out in the shed, it's not going to suddenly lose mass overnight. Like, it can rust over time, but it's not going to lose mass overnight. So I'll use the old Joe Weider stuff. I've actually got a photo of myself with Joe Weider before his death as well. So. No, man, these guys are inspiration to me. Thank you so much again. So CZ, under investigation by U.S. prosecutors, launched in 2020. They're trying to figure out the anti-money laundering activity of Binance. And who wouldn't, right? It's this massive operation. We're going to talk about some of the numbers here in this article in just a second here, but massive operation with... people don't really understand the scope and scale of Binance. Until you take a look at some of these numbers, it's not obvious what the scope and scale of some of these platforms really is, right? Decentralized finance is one thing, but the centralized exchanges that have this sort of legacy action, the legacy transactions on them, the legacy volume on them, most of us don't really understand how big this business really is. And once it does grow to a certain size, yes, authorities are very interested. So let's take a look at that. Some of the numbers here as well. So the Deadwood says the Binance manipulation is unreal. I believe that, right? I'm sure there's significant wash trading, and that wash trading on a platform like Binance leads, of course, to maker-taker fees, which funds them. So the more wash trading they can get, the more, it's not a regulated market. The more wash trading they can get, the better they do. Paul D says everything on BSC seemed legit. I love this community. You guys like to deliver that stuff just as dry as I do. So yeah, BSC. Here's the thing: as decentralized finance goes, I would trust BSC more than I would trust Avalanche today. Is that a weird thing to say? I would trust BSC more than I would trust Avalanche. I would trust BSC more than I would trust Phantom at the moment, certainly, and definitely. All three of those I would trust more than I would trust Solana, right? It's all like, what compromises did we have to make? What shade of gray are we today when we're trying to use cryptocurrencies? But I digress. Let's talk about this article for the probe into Binance specifically. But they're just kind of like using CZ as their penetration point. This sounds... I've got to be careful about my verbiage here. I'm going to get demonetized. I'm going to get kicked off YouTube. Anyway, so the federal prosecutors requested the crypto exchange for its who the hell wrote this? Reynaldo, come on, man. You got to get this stuff proofread. Seriously, you're good at this stuff, but we got to be a little better here. Who proofread this, guys? Come on. As seen below, per data shared by Zhao, Binance is the leading exchange per spot trading volume, and this is weird. At its height, Binance was processing over 1,500 billion in trading volume. Isn't that 1.5 trillion? Let's just use the T word, guys. It's more impressive anyway, right? $1.5 trillion US dollars worth of trading volume. Now, maker-taker fees may only be a fraction of a percent, but I kind of want to do the math right now. So let's go with 0.2% of 1.5 trillion. Let's see if we can actually get this to return the result live. Now, I'm using a special search engine that might not like what I'm asking. 0.2% of 1.5 trillion, it might not get it, right? Search is not the best at this sort of thing. Let's just see how it does. What is no? Come on. Okay, it's not figuring it out really well. What's 1%? Oh my gosh. Help me. 60 billion. Paul D is quicker on the math, and I realized I couldn't use a typical calculator here. Quicker on the math. Let's pretend like that's $60 billion, though. We'll take that at face value. I could also, here's a little hack right here. Instead of that right there, search, I can replace all of the area in the browser bar right there with duckduckgo.com. And now, after that point, question mark. See, it just translates it over there. It's not doing so great either. Yeah, not so great. What the heck? Why can't these search engines figure it out? You guys are failing me. I'm not happy with you. All right, so yeah, we'll call it $60 billion. $60 billion ain't nothing to sneeze at. That's a good year's work, right? I mean, how many people could you afford to hire at $60 billion? Certainly you could afford, like 3 or 4 people, probably. I don't know. Anything for Clicks jumps in and says, when 14K? That's a good question. Anything for Clicks? We have the chart that's published, and the description has a link to it over on TradingView. You can take a look at that channel, and I suspect that's probably kind of the trajectory towards 14K. But we can see a breakout to the upside outside of this little channel on the chopsticks, or we could see a breakout, or we could just see it bounce down through this channel, which is kind of more what I expect. But I've been totally wrong before. Not a technician, so can't give you a date. All right. Paul D says, I think my math's wrong, but it's a large number. Totally agreed. That's the bottom line, is that you can afford to hire more than 1 or 2 people, right? So Binance apparently has Zhao. They've been talking to the federal prosecutors, Zhao, and 12 other executives, claims Reuters. The probe looked into the platform's mechanism to prevent illegal transactions and its operation related to U.S. customers. But again, you can see on the chart here that is their comparison to OKX, FTX, and Coinbase. These are not slouches either, right? Let's be very clear. They've got hundreds of billions of dollars in transactional volume. It's just massive, right? Monthly spot trading volume in billions. So even the least of these, right? We're just going to say the least of these is doing well over $1 billion and upwards of $10 billion in monthly spot trading. It's unreal. Natalia Ortiz is giving us the Enye in the chat, right? Hey, pour one out for the Enye. It's the unsung hero of Spanish, right? People need to know how to do that. Hey, if you want to know how to do an Enye, let me show y'all live in the chat. Hit the Alt key, 164. Boom. See that? So you hold Alt, and then you, on the numpad, type 164. Now you too can be empowered to do what Natalia has done in our chat. Thanks for being here with us live. All right, so Binance is the leader, but all of them are doing billions of dollars in monthly transactional volume. It's just that, Binance is a cut above the rest. And when you're the biggest, you get picked on, right? First, in a bar fight. I'll just say, I'm not going to say this from personal experience, but in a bar fight, if you had to fight multiple opponents, who would you hit first? Who would you try to take down first? Right, the biggest dude in the other group, because if you don't, he's going to be a threat later on. That's what prosecutors do. Now, they also want to make an example of the biggest player, because then, others will think twice about doing illegal things. So works in law enforcement, works in real life, works in any kind of contentious environment. So I get why they're doing it, but at the same time, I feel for Binance, I guess. I never thought I'd say those words, but it's a bummer, right? It's a bummer being the biggest guy. You're the biggest target. So the 2020s probe was reported at the time, but the details remain unknown until now. So 2 years of kind of gag orders. But the Justice Department requested documents about Binance's compliance with the U.S. Bank Secrecy Act. The employees responsible for complying the exchange's action to prevent illegal finance and suspicious financial activity. But yeah, it's pretty crazy. So Binance Chief Communication Officer Patrick Hellman said the following, talking about the probe. Regulators across the globe are reaching out to every major exchange to better understand our industry. This is a standard process for any regulated organization, and we work with agencies regularly to address any questions they may have. The Deadwood says, smash the thumbs up all, please, and thank you. Thank you, the Deadwood. Appreciate that. So crypto exchange Binance under the spotlight. Yeah, we know this, but let me jump down to the upshot of it. Here's a legal expert, Collins Belton, and he said it's been 5 years and its market cap is higher than most U.S. companies. Speaking of Binance, why wait this long to take potential action if you're concerned about potential harm? Letting things balloon only to prick it once massive seems like a recipe for inducing consumer harm rather than staving it off. And I couldn't agree more, right? So I think that this probe it's not exactly a nothing burger, but I think that if U.S. authorities are interested in trying to take legal action against Binance, they needed to do it a couple of years ago, like when they first started down this path, and they needed to be sure that there was some kind of wrongdoing and that they had some kind of a case. But yeah, just sort of like requesting information to try to understand how the industry works. Maybe their official communications officer was totally right? Maybe their chief communication officer was totally accurate in saying this is just SOP, right? Typical stuff. They're just asking for info. They're trying to understand how better to work with other exchanges. I hope that's the case. Certainly at around that same time or a little before is when Binance.us was launched. So it seems like Binance is trying to work with U.S. regulators and trying to work within that U.S. framework. Let's do something a little out of the ordinary. And right now, I want to talk to you, create a little segment here where we talk about the Ethereum merge. Here on Mind Your Biz, we're going to be talking about the Ethereum merge all the way up to the point of it actually happening. That's part of the thing that got my butt in gear to make sure that I had a regular publishing schedule or live stream schedule and publishing cadence so that we could talk about this in real time as we saw the date approach. I wanted to make sure that the Mind Your Biz community is not only the most informed, but the most educated, those that can really pivot correctly, make some of the best decisions for your mining operations, make some of the best decisions for your investment portfolios, make some of the best decisions about whether or not you'll participate in token sales or participate in crypto and DeFi at all on certain platforms. So let's, with the spirit of this, of the merge and that sort of movement of getting closer and closer to the merge, let's take a look at an article by The Block talking about it, and let's go through some of this, and then let's fact check or even correct this as we go if we need to. But the quick take, they say that Ethereum's biggest ever software update, the merge, will take place in just over 2 weeks' time. The upgrade changes Ethereum's consensus mechanism to make it more energy efficient. And that is supposed to be the upshot of it all. I'm going to add to that its consensus doesn't just make it more energy efficient, it fundamentally changes the nature of its consensus. You probably already know that if you're here at Mind Your Biz. You're probably already aware that proof of stake is nothing like proof of work. And so it isn't just a more energy efficient version of proof of work. It is a fundamentally different type of consensus. So let's just keep the main thing the main thing. It is just different. And it's meant to be a reward for the people who participated in the ICO all those years ago. So for being very, very clear, if there is a case to be made about Ethereum selling securities, it's probably that. It's probably the fact that those people who were purchasing Ethereum tokens way back when you could give 1 Bitcoin for 2,000 Ethereum or 2,000 Ether, they were expecting to be rewarded in the future with future yield, with additional yield by staking those tokens for network consensus. So maybe the Bitcoiners have got it right on this one. Maybe absolutely Ethereum could be deemed a security when framed that way. There could be a statute of limitations, right? Waiting so many years before it actually happened, and then, of course, not delivering it right away. So maybe that argument doesn't hold water. But I can see how people would think that Ethereum is a security when what you're really expecting is to be getting additional yield based on proof of stake. So after years of planning, Ethereum is approaching a highly anticipated blockchain upgrade called the merge. Yep, we know that. Why is it happening? Well, first off, because they promised it. I don't think it has anything to do with the actual green or energy usage or the green look or ESG compliance of Ethereum. I think it has everything to do with the fact that they promised it from day one. So we should be expecting this. We should have been expecting this for years, back in 2017, back in 2018, when Mind Your Biz first started launching its regular content. We talked about the fact that proof of stake had already been promised and they already missed the date that they said they were going to deliver on proof of stake. So the fact that we're seeing it now, is it really that big a shock? No. And is it some kind of reaction to the power expenditure? No. Is it a reaction to perhaps more the complaints of stakeholders saying we want to earn the yield? Well, yes. And that's a matter of record. We can see that in the forums that the Ethereum core developers use, in the pull requests, in the issues logged within GitHub. So we know for a fact that stakeholders have been waiting for their shot to earn all of the yield, all of the block reward that goes to security. Paul D asks a very relevant question. Was ESG ever mentioned back then? No, it wasn't. And I'm so glad you asked. Use the Internet Wayback Machine. Go ahead and fact check me if you want to. Smear me on public media if you can. But no, ESG was not mentioned regularly back then. Not at all. This was not a common acronym. This wasn't in the investor's lexicon back then. Nobody was using the acronym ESG. It's only been a recent phenomenon, and it's only been because of sort of corporate kowtowing, right? People who want to look good in front of VCs and people who want to look good in front of government entities who, at the moment, think that ESG is the most important thing. But we'll talk about that another time. And do be sure that if you're in a territory that sells Crypto Magazine, that you look for issue 4. You will see an article written by yours truly that has to do with this. I can't give away any more than that, but if you are in a territory that sells Crypto Magazine, well, look for articles written by Mind Your Biz, because I've got more to say on it than just that, and instead of saying it, I wrote it. But the merge is happening, they say, because of the Ethereum network consuming 75 terawatt hours per year of electricity, which is the same as Austria's annual power consumption. Well, what has Austria done lately that's any good, that's interesting at all? Huh? Has it done anything to contribute to, with its GDP, to contribute to the world? Name one thing that comes from Austria that I would know. I mean, literally anything. Even like whatever. Now I'm thinking about it. There's some pretty dope firearms that come out of Austria. I lied. Well, okay. Well, you know what? Point taken. But you know what I mean. Decentralized finance is entirely dependent on Ethereum, and so I view the cost as justified personally, but others maybe don't. Stereo 2 stopping in to say hi, lurking while driving, always good keeping up with the ETH merge. Thank you for that. Really appreciate that. They say this is different than proof of stake, where blockchain is secured by validators. by validators who are selected by staking tokens. Validators on Ethereum must stake 32 Ether, or at current prices, about $48,000, to be eligible. Anyone can be a validator node as long as they meet the stake requirement. Users can also pool their assets together by delegating their tokens to a validator and sharing the reward. By putting up their own assets as collateral, users accept the risk if they act maliciously, their stake could be slashed and they could lose their own funds. This is the incentive to be a positive actor on the network. It's similar to miners who have to invest in mining equipment and pay for electricity to mine blocks. They're right, there are incentives. There is game theory to proof of stake that does need to be taken into account, but there's also game theory by way of bad actors. So there are definitely bad actors who can take over a majority consensus just by owning enough coins. That is always a very real threat. What is Uncle Sam particularly good at when it comes to finance? You guessed it, printing free money. Uncle Sam will always reward himself with as many dollars as he needs to buy whatever he wants, including Ether tokens. We should have thought about this. We should have seen this coming. And when it happens, mineyour.biz will be here saying the same thing, that is a possible threat vector. So when will the merge happen? Somewhere between the 10th and 20th of September. We're saying around the 15th. Now, I've had some people ask me, hey, mineyour.biz, what do you think about that date? Is it going to happen? Is it going to happen on time? And I've just said very frankly, probably pretty close. Maybe not exactly on time, but probably pretty close. I'm not too worried about the Ethereum core developers renegotiating this date or talking about a different block height that they'll do this. They defined a specific number of hashes that need to happen before it changes, and I think that's going to result in this particular network upgrade happening pretty close to the time that they say. So somewhere between the 10th and 20th. I won't be surprised if that happens. It'd be, I won't be surprised at all, right? So I don't think there's any reason to doubt that this is going to happen relatively close to on time. So the first part of the merge is going to be called Bellatrix. Second part will be called Paris. But the first part, Bellatrix, will happen on September 6th, and we'll upgrade the beacon chain to make it ready for the merge. After that, Paris, the proof of work chain, will hit the switch to proof of stake. The exact transition time isn't known, but the merge will execute when the network reaches a preset terminal total difficulty. Again, this is already set. This is baked into the chain. This network upgrade is essentially on rails. It will happen, and when it hits the end of the line, meaning the total difficulty, that's it. That's all she wrote. The network is done, right? It's a specific number of hashes in total that will have been completed that triggers this essentially impossible difficulty bomb, we'll say. Based on on-chain estimates, it's currently estimated to take place on September 15th, but it could fluctuate by a few days either side. Yes. What is done to prepare for the merge? Well, plenty has been done. Gradual development towards the merge came in 2 milestones. First was the creation of the beacon chain in December 2020, which kicked off the initial phase of proof of stake transition, and there have been people who've been earning from the beacon chain since that time. What has me concerned has been, and this is not advice, by the way, just in case you forgot, but what has me concerned is that the testnet Guerli has also simulated a beacon chain merge for testnet, and it's broken some of the services that I've come to rely on in my consulting business. It's had me very concerned that I have not been able to use testnet tokens to be able to instruct the clients that I have and upskill them into Web3, into Web3 fluency, right? That it just doesn't work. And it looks like potentially, I apologize for this. It looks like potentially my YouTube back end has disconnected, so I'm not seeing your chat real time from within my dashboard. Apologies if I don't respond to you right away. But yeah, just to say that the Guerli testnet, the way that it has been, oh yikes! I'm seeing massive network instability. Hopefully my stream is still working. It looks like I'm all right. Okay, cool. So the Guerli testnet, the fact that it was not working the way that it needed to with third-party services has been a huge cause for concern on my part. I didn't have concern until that point, frankly, and now I do. So take that for what it's worth. Paul D says, I won't be surprised if there's problems with oracles working and chaos on DeFi. Totally agreed. The fact that there was a third-party service, and specifically a third-party service that is critical infrastructure for Ethereum, and I'm just going to dead name it, Gnosis Safe. It stopped working on Guerli testnet. They already pulled support for the Rinkeby testnet because the Rinkeby testnet is not going to simulate a merge. So why would you keep a non-merged, non-proof of stake testnet? There's valid logic there. I understand that. But at the same time, if the testnet that you are trying to simulate future conditions on has stopped working on these services, you need to pump the brakes, or bare minimum, the owners of these services or the developers for these services need to contribute, start leaning in and heavily debating whether or not the merge should happen, whether or not the update should happen, or if it should be pushed back, and if so, what needs to be fixed in order to maintain functionality. Now, I think that what Paul D is mentioning in the comments is the most likely culprit. Oracle data is going to break when you make fundamental changes on a network. So hopefully it doesn't come to that on the mainnet. Hopefully we do have support from Chainlink and others. Hopefully everybody is on board and is working within this very first part of the merge, right? Specifically not Paris, but Bellatrix. Hopefully we do see that take place on the part of third parties, right? All the third-party services, especially the oracles. Hopefully they get their butts in gear and they prevent any kind of an outage, or if so, it's just a very small outage. Let's see. Whoa, this is crazy. The Deadwood says, you're fine. Seeing your numbers drop from over 200 to under 200 to back over in under a minute. Video and audio are perfect. You know what's strange, though, is that I was actually no longer seeing the chat, like my YouTube dashboard. That's weird, and I'm wondering how, like what you're saying, I'm wondering how that managed to be correlated, but I definitely had a bit of a system instability, even though my stream was still solid green from within OBS. But yeah, throughout 2022, in preparation for the merge, Ethereum developers carried out several dress rehearsals on test networks, dedicated clones of the Ethereum blockchain for experimental purposes. Developers performed tests called shadow forks on the mainnet as well. I just didn't see that work. And now here's the honesty. Will the Ethereum merge make it more scalable? No, it won't. And they go out of their way to say it. Common misconception among users is that it will increase Ethereum's overall network capacity and decrease fees. Here's what they're leaving out. And they also think it will decrease fees, and it won't. The network upgrade only changes Ethereum's consensus mechanism. Similarly, the time to process new blocks will change only slightly, reducing from 13 seconds to 12 seconds. So even after the merge, Ethereum may still be prone to congestion, transaction fee spikes during times of high demand. Other plans for scaling via a system of multiple layers, including rollups of multiple varieties and sharding, of course. The network will have some time to go to reach there. We'll have some time to go to reach there. At the same time, the merge lays the groundwork for future scaling upgrades at the base layer, like sharding, which allows splitting up the blockchain into shards and allowing parallel processing of transactions across them. I do think that sharding is going to be the best thing since sliced bread. I think that sharding is going to absolutely destroy the other competitors in the EVM space because there's so much value captured on Ethereum that it'll be hard to move away from Ethereum once we know that there is enough capacity, carrying capacity, to scale up to the tens of thousands of transactions that are needed to take on traditional finance and the traditional finance burdens. But again, if there's a very real threat from state level actors from proof of stake, will it matter? Maybe not. It might not. Yeah. There's other news that has to do with Ethereum and the merge, such as Meta, right? Facebook's Meta finally being on board with using Ethereum. That to me is a counter indicator. The fact that it's moving towards, ESG compliance, the fact that it may potentially be gamed in the future by state level actors, that has me very concerned. So, and then, Meta announcing support for it tells me that they finally feel confident that there's enough surveillance and there's enough maybe compliance, maybe because Tornado Cash is no longer involved, has been sanctioned. It's just all very strange to me. Listened in on the interview between Joe Rogan and Mark Zuckerberg last night as well, and good grief, I finally was able to listen in on it, and I just don't. I don't know what to make of platforms like that anymore. They've absolutely rocked the world. They've made some things great. They've made some things terrible. But one of the things I don't agree with is Meta's adoption of Ethereum. So the merge, I don't see it being that much better. But another question that's asked here is, how will the merge change Ethereum's tokenomics? Well, it has economic ramifications too. Apparently, the current estimates show that the Ether creation will drop by 90%. Paul D asks, Diem on Ethereum, it's more likely than you think. Yeah, no, I totally get it. Well, here's the thing, though. Diem has been forked into its own different blockchain. There is an entirely different working group that's splintered off of the Libra and Diem projects. And so, yeah, the Facebook is absolutely still trying to do its own thing separately. And I hate even calling them Meta. I kind of refuse to give them that. I know that they've registered for that name, but they still own Facebook too. So I can call them Facebook, and you know who I'm talking about. I'm going to stop calling them Meta because it's a stupid name and it's an unenforceable trademark. So, yeah. Besides, like, way to ride on the coattails of what everybody else is actually building. You guys are just like LARPing. You have all the money in the world. You guys are LARPing as like our technology saviors. Other people are really building what you guys are going to use. Just like Apple, right? Like, hey, way to steal open source and make it sound like you innovated something. Not. So what Facebook is doing here, they're still forking some of the code base that they actually did kind of innovate, which is high performance, but is extremely, it fits all those narratives of ESG and compliance, and allowing for the state to basically jump in and totally pause their permissionless network. It's totally a joke, right? It's not even decentralized. They don't even call it a decentralized ledger with the tech that they've forked from the original Libra project. So with Diem, yeah, I'm worried that if they do say that they'll launch Diem on Ethereum, that's the biggest counter indicator for Ethereum's censorship resistance. So I don't like that at all. Paul D, their dead-eyed, legless Nintendo Miis are the future. No, I can't even say what I want to say on this stupid platform. Everything is so confiscated and dumb. I don't want to live in this world, man. Seriously. Why can't we go back to like 1998-ish? I know. Whatever. Living in the past. But you got to admit, the admission of a surveillance state, we just didn't know how well we had it. We didn't know how good we had it. We had cell phones, but we didn't have smartphones, right? We didn't have little spying devices. We had baseband radios inside of those cell phones, but we didn't have like full multi-core processors trying to analyze our speech patterns and run AI subroutines without our permission, without our knowledge. Anyway. Yeah, Latrell, remember when the internet was fun? I do remember when the internet was fun. I've stopped having fun here, dude. That's the thing. Like, it's nice to have information. It's nice to have publishing ability. It's nice to have ownership now with Web3. That stuff is nice, but man, the trade-offs and the strings attached. Oof. Paul D, we could all hang out at the arcade and use eCash, right? Or just like physical tokens, or just like, steal slugs from the hardware store if nobody's watching, maybe. Just saying, man. Make piracy great again. Real world piracy. So, yeah, current estimates show that about a 90% reduction of block emissions will happen after the merge. I am doubtful. I think that's a dubious claim. Right? 90% reduction and triple halvening. I don't see it. I actually think that it's going to be far less of a reduction than we think. I think that just like EIP 1559, that those who use flashbots and exploit MEV are going to continue to use flashbots and exploit MEV, and they are going to continue to pump up the amount of block reward, right, of security reward that comes out of every new block after the merge. And I think that everybody who thought there would be some massive reduction in fees is going to look completely foolish for saying that, for peddling that as an investor narrative. And here at Mind Your Biz, we will be dancing on their metaphorical graves, because that's what heroes do. All right, let's jump out of this article because it's actually making a little bit me a little bit depressed almost. But if the merge does succeed, happy day, right? Like, those who were holding on to their old bags from the Ethereum ICO will be the happiest people in the world. They'll be super rewarded, right? The yield from staking will help them feel like they could justify the expense of that one Bitcoin years and years ago. But I'm not super happy. Yeah. Paul D says the triple halving guy was saying $15 trillion market cap and $7,000 ETH at the end of the year. I think he may be wrong. Yeah, me too. But, whatever. If that's Anthony Sassano, right? Like, sharp guy. But here's the thing. It's difficult to change a person's mind when they have incentive not to. He's got the strongest incentive in the world not to change his mind about the merge. Everything that is ever said about Ethereum is bullish, including the criticisms. It's all bullish. So this is really good for crypto. It's really good for Ethereum. I disagree. So talk about the cost to mine one full Bitcoin, currently at 104. They'll use our S19J Pro, but let's add a pool fee. We've been failing to do this in the past. It makes our cost of production about $16,000 at 8 cent power, meaning that you kind of need lower power, and it means your break-even point is 9 cents. So at 7 cents, if you can swing it, you're at $14,000 Bitcoin. At 8 cents, you're at a point right now where you're kind of sweating it. Not gonna lie, you're sweating it. I had failed to put in a pool fee before. If you can manage to carve out a 0.5% pool fee instead of a 1% pool fee, you're still okay, but not as good as you'd like. So be mindful of your power costs if you are mining Bitcoin on ASICs. On GPUs, let's very quickly go through this on whattomine.com. There is, of course, not only a break-even point listed based on pricing, but that should be absent from any cards that don't have pricing. See, so we're not going to get a full true ranking. We're notably absent on the A2000 6 gig, on the 1066 gig, which is like basically the king of GPU mining in a lot of ways, because it can mine so many more algorithms than the Polaris cards from that time. But then we don't have any pricing on the Polaris cards, 4 gig or 8 gig, or the 3060 Ti, or the 3060 Super, the 3060 LHR, the 1660 Super, all of these cards that basically mop the floor with the highest priced cards, right? Like the A5000. Who's going to spend $2,600 on a GPU right now for mining? Only a damn fool. Like, that's the bottom line. Only a damn fool would go buy that card right now just for mining. But if you could find a deal on some of these other cards, you might be enticed to do that. So this is not a perfect breakdown, and my legacy spreadsheet that talks about this kind of is still a better resource than what you have here. Maybe I should update that and re-release a video on that, give some kind of an update. I know I would need a tab for FPGAs and CPUs and stuff, but ain't nobody got time for that. Y'all have never paid me for it, and and I never want to charge for it, so I've got to figure out some way to justify the time for that one, because it comes across as being a little too value added. But What to Mine finally caught up with what I've been doing for 4 years, and they added this little line here: break-even point and price. On the break-even point, they show the 3060 Ti being top of the list, and you can do a stacked ranking. You can sort for which one has the lowest break-even number of days, and you can also pay attention when you do that to which one has the lowest cost and the highest returns, right? So it looks like in that stacked ranking, you've got the 6600 XT, kind of validating what a lot of people already thought, being one of the best values, right? You can get 4 of these for about just under $1,000 or about $1,000, and you can potentially run these as high efficiency cards in any other applications that you have, and then redeploy them as mining cards as needed. With the ability to mine Kapow at a relatively high performance, you've got Neox turning profit every single day there. So just consider and reconsider and reconsider and run the numbers. That's the bottom line there. That's what I want you to take away from that. You can make your own spreadsheet, very similar to how I've done for years, and I've taught you how to do that right here on Mine Your Biz, so you can check that out on our previous spreadsheet videos. TX Street is showing us the current fees on the networks, and I don't know if this is going to show me what I had. There we go. So median transfer fee, contract fee, and gas price. Current transfer fees just over $1. Current contract fees over $7. Prices are going up as people are preparing to right-size their portfolios pending the merge. And then same with Bitcoin. Prices are up. Median transfer fee is up. Median fee in sats per VByte is up. There's a lot of network utilization. That's what I'm seeing here, more so than usual. And that's a good thing. I like seeing on-chain activity. I like seeing that fees are proving that the network is being used. DeFi Llama also has some quick info for us that Ethereum is losing a tiny bit of its market dominance by way of TVL. It's down maybe half a percentage point, so not too much, but down some basis points. And we can see here in the stacked ranking, at least for all of these chains, right, with Tron and Solana included, you can see all the way over here that the market cap divided by the total value locked. It's a phenomenal metric for showing how much potential upside there is. As this number approaches 1, that means that it's kind of, even. It's head-to-head, the market cap and the TVL. If this is a multiple, right, if it's a larger number than 1, that means it probably has some space to grow its TVL. What does that mean for EVMs like Avalanche and Tron? Well, it means that Avalanche and Tron right now are probably, in my opinion, they're probably overvalued based on that metric alone. So here's what I mean. You've got Solana, right, that has tons. It's got a much higher market cap than it does TVL. That means there's a lot more SOL than there are other tokens trading on it. So you could do token sales for SOL, and you could do those initial drops with plenty of liquidity in the Solana ticker symbol itself to sell off those tokens. The same is true of BSC. And I think that's why so many tokens launch on BSC, is because of that relatively high liquidity in the BNB token. So yeah, just another metric to take a look at there. We'll take a look at that more in the future. And from our portfolio, we're going to quickly take a look at our GPU ETH replacements and just see what is currently leading the market. Neoxa, Flux, and Ergo have the highest 7-day performance, and the lowest market cap of the three is Neoxa. It is growing, but lowest market cap is Neoxa. Second is Ergo, and then third is Flux. These, in my opinion, have the highest potential for fast upside in the next several weeks. So we'll monitor those as we near the merge. Guys, we've gone a little more than an hour, and I didn't intend to go quite that long, but I appreciate you watching all the way to the end of the video, smashing that thumbs up. Thank you for being supportive. Be subscribed if you're not already. Metrics show, or my analytics show, that most of you are not. Thanks for watching to the end. You're the reason I make this media. I love your face. Remember to stay private and mind your biz.